Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como. Today is the 3rd of November. It feels very crazy that we're already in the third day of November. I'm very sick today, and so if I pause to blow my nose or sneeze, I apologize, or maybe I'll edit that out. But maybe I can get through this whole video without having to do that. Today, we're going to talk about how all the markets were firing on all cylinders. It was a great day in markets today. Good day to start off the month first, for sure. Let's talk about what happened here. Canola was up $10.90 to 647.90. Minneapolis wheat was up 5.5 cents at 5.59. Kansas wheat up 9.75 at 5.47.50. Chicago wheat also up 9 cents at 5.57.50. Soybeans up 19 cents. We're going to talk a lot about technicals today on soybeans. That closed at 11.34 1/4. Corn up 2.75 at 4.34 1/4. Bean oil was up over a cent today, back above 50 at 50.19. Canadian dollar sunk another 22 points down to 71.16. We're also going to talk about why that's important. Live cattle up 253 to 232.20. Feeder cattle up 575 to 331.48. All right, let's take a look first here at the December soybean oil market. Today, the winner chicken dinner was in soybean oil. Bean oil posted 2.4% gains today, or $1.16 per pound, which were the largest percentage gains on the board. So I mentioned that because I think that's important when we look at canola today. We did see an uptick in canola, almost equivalent to what we saw in bean oil. So we do feel that there is some heavy correlation there. However, there was some excellent news as well on canola. Canada and Pakistan have agreed to facilitate the export of Canadian canola to Pakistan. The countries both stated in a joint statement on Monday. Canada has been looking for new markets for canola after China announced their preliminary anti-dumping duties on Canada of over or around 75%. That happened in August. That's a year after Canada said it would levy 100% on tariffs of Chinese electric vehicles. So no real efforts to change the trade row, although we did hear some rumors that the meeting between Carney and Yi went well. I thought about putting that up as a headline too, but because I think it's less important at this point until we see some definitive agreement between the two countries. What this does do, though, is it signifies the reactivation of a market that historically absorbed an average of 810,000 of tons of canola annually between 2015 and 2020. And the peak of that, or the largest year, was 1.35 million tons in a single year. So this not only provides a vital outlet for the Canadian canola farmers, but also underscores the success of Canada's strategy to diversify the canola markets amidst challenging global trade landscape, both to the U.S. and to China. For Pakistan, the agreement ensures renewed access to a key commodity essential for its expanding market, while also strengthening bilateral trade relations across various sectors. So I think it's a win-win for everybody here. In Canada, we needed some diversification. We knew that some diversification was going to come. We just didn't know in what format. We still think that there's opportunity for growth in the UAE, Bangladesh, and maybe even the EU, but this is a very good sign. All right, let's move on to soybeans here. Very strong soybean close today. The cooling trade tensions with China are a primary reason for this. China bought a reported 7 U.S. soybean vessels last week, along with some wheat, and we'll talk about wheat here in a second. So that's driving the soybean market today. Originally, there was a bit of a headline here that Chinese buyers purchased Brazilian beans as the prices in Brazil eased after the trade deal, or the trade memorandum of understanding, whatever you want to call it, that happened last week. So, what happened is the U.S. prices were driven higher as a result of the trade optimism. That made Brazilian beans look cheaper, or they faded a little bit in value. So what the Chinese did is they went up and purchased more cargoes of Brazilian beans. Now, this originally was was thought to be a bit of a setback for the U.S., but that's not the case. There is still beans being bought from China in the U.S., and optimism is still really high. Here's what that looks like on a chart. So we have, last week we saw a previous high traded above here, and we saw another one do that today. We're going to pull back some of these charts and show you what this looks like. So here's the previous high that broke last week from back at the beginning of the year, January, before the Trump inauguration. But now it has bested even this late September one and just blew through that significantly today. If we pull back even further and look at this from a weekly continuation pattern, you can see that this is the same high here that we broke today. Now there's just air up here between here and 12 and a half, call it 12 and a half or so. That's the previous high from May of 2024. Now, there is a couple of technical indicators that are lining up here, which is that previous high and the 200-day moving average. The 200-day moving average is dipping a little bit below that resistance level. So that's probably the resistance level that we'll watch going forward. That's still in a bit of a decline. So every day that goes by, that'll come in at a decline. However, I think we should be prepared for the possibility of a pullback. Here is a bunch of momentum indicators that I just kind of layered on top of each other. An exponential MACD. I got a relative strength index, and then a slow and fast stochastics. Now, these kind of things track the same thing, so that's why a lot of the times they show the same kind of thing. But what this does show here in the relative strength index, we are in an overbought situation in soybeans. The slow stochastics are showing the same thing, and the fast stochastics are showing the same thing. So as you can see, whenever it reaches kind of some of these levels, it does tend to fade a little bit. That's not necessarily to say that the trend changes. It's just that there are some times of consolidation and things like that. Now, that doesn't necessarily, that's not gospel. Sometimes it can go into oversold territory significantly longer, which is usually driven by a fundamental input. Usually that's weather driven, like drought or something like that. But, this could accelerate even further if we continue to see purchases of US beans from the US. But at some point, I just wanted to give the heads up that the markets are looking at this as an overbought kind of commodity at this point. We also did see a test of the 61.8 extension Fibonacci. So that's a calculation of possible extensions after breaking to a new high. 61.8 is generally a point where it does see some resistance as well. We did close above that today, which is a positive sign. But trading up to the 61.8 or even as we get towards 78, 79, that could also kind of be looked at as a overbought kind of idea. So I think there's a lot of indicators here is saying that soybeans may be overbought. So there may be a bit of a technical correction in the offering here. But that doesn't necessarily mean that the upward trend that we're seeing now in soybeans is going to change. All right, let's look at wheat because we also had a really great day in wheat. A lot of this is also as a result of the Chinese optimism. We did see wheat break to a new high. This is Chicago wheat, by the way. We did see Chicago wheat break to a new high today, and we also saw it trade above the 50-day moving average. Now, both of those had converged. It looks like now the next level of resistance up here is 567 or so, if this momentum can take us up that high. We also saw that same kind of thing in the hard red winter wheat. Same high was broken, and the 50-day moving average was broken. You know what I'm going to say here, because I've been saying it for a while, the Minneapolis December spring wheat is lagging significantly. It's kind of trading right along this trend line here. It's had a trouble getting above this trend line. It's had trouble staying above the 20-day moving average for a long period of time. It just struggles overall compared to the other wheat classes, likely because China isn't a big buyer of high protein hard red spring wheat. They generally take the lower winter class and blend them into what they need for noodles, etc. So Minneapolis just isn't tagging along for the ride. But what is kind of looking bullish here is basis in Canadian wheat. Now, there's a couple of reasons for that. I believe that the elevator stocks are low and that they are looking to get some more supply so that they can continue exporting. Obviously, they're not exporting a whole lot of canola at this point in time, and they're looking for something to do. And so we're seeing basis levels rise. Now, I usually reference the northern Alberta, which is kind of that yellowhead corridor of Alberta. But I wanted to see as well if this trend was happening in other parts of the country. So I just pulled a couple of these charts as well. Northeast Sask, which would be like Clavet to Yorkton, that kind of area, and north and south there. We're also seeing this extension of basis there as well. And we are also seeing it in Westman. So across all three prairie provinces, we are seeing this as well. I thought I included a Canada chart here, a Canadian dollar chart, but it looks like I didn't. So I'm going to explain the Canadian dollar chart here for you. Actually, maybe what I can do. Oh, there we go. I can do this. Here's the Canadian dollar chart today. It is currently trading at 71.14. As you can see, we did trade down to the previous low that we saw back in on the 14th of October. So the gains that we saw, including the day that Canada made its rate adjustment announcement that brought it up to 72 or just a little bit past 72, has completely faded off. If we see this break below this low again, I think that we are in for another leg lower in the Canadian dollar. Now, that's a good thing when you look at, again, turn back to uh, these basis charts. A big part of the reason that these basis charts are doing so is also because of the Canadian dollar. So when the Canadian dollar loses value, or the US dollar becomes of larger value, when you convert the US wheat prices into Canadian, it benefits us here at the farm gate. So that's part of the reason. I also think that there is a part of the reason for that happening is the low elevator stocks. All right, if you want to receive all of our fundamental, all of our technical, all of our very well researched reports, you can sign up at canadianagmarkets.com/subscribe. It's only 99 bucks a month. You get our morning analysis, you get our weekly in-depth analysis, and you get our ad hoc or timely actionable information as well as you get these videos sent directly to your inbox to peruse as well. If you haven't done so, subscribe to this YouTube channel. We really appreciate it. Thank you for joining us today. We will see you again tomorrow. I made it through without sneezing. Great day.